It is likely to be cheaper and cheaper to make a call in Kenya this year as mobile phone is in the wine. The powerful cell phone companies are well positioned to fight it out in the market. Every time someone presses the green button, it's a small victory in what promises to be a robust fight for the Kenyan cell phone customer. The fight for callers is growing. In less than 6 months, the cost of a call has been cut in half by a number of big operators in Kenya.
Yes, initially I refrained from calling it a price war, but now it is clear that it is a price war. Safaricom's next move is to do nothing, because the price at 1 shilling is below the cost price. And I don't have a mandate to give away the shareholders' money. So I will not launch a tariff which is below cost. That's clear.
I think, and I should not even call it price war to begin with. Okay, we have not reached a stage where prices are far below the cost of production, or far below the cost of creating that minutes which are being used by the consumer. I will call it price optimization drive, which is happening in the marketplace. Almost 5 months back, 6 months back, the prices were hovering at 15 shillings per minute, okay, 12 shillings per minute. The moment government reduced interconnect charges, I think the industry took cognizance of that and brought down the prices from what they were prevailing at to 3 shillings a minute. And after that, I don't think any further price drop has been effected.
The fight for customers is powerful enough to shake the Kenyan Stock Exchange. A week after newcomer Airtel reduced their call rates to 1 shilling per minute, competitor Safaricom's share prices dropped by 6.7%. The cutting of the call rates may be causing headaches in the boardrooms, but on the streets, the people aren't complaining.
From a perspective of the consumer, it definitely is a very healthy thing, because a lot of consumers now are able to interact more. And as we all know, in Africa, a lot of the communication has been on mobile because the terrestrial communication was not very good, what we call the landlines, obviously. So today, a lot of the mobile providers are giving decent to good service to many of their subscribers, and a lowering of the price means that more consumers are able to get on board, interact more, communicate more. So the lower the price, the better it is for the consumer.
So, are these low call rates sustainable?
The current retail prices are not sustainable. The prices we're charging at 3 shillings on net and 4 shillings off net is sustainable. But we're finding, if you look at the off net prices from other people, that's not sustainable. And now they've gone one step further, and their on net price is no longer sustainable. And that's why investors, in my view, are refraining right now from coming into this market, not just to Safaricom, but generally coming into the emerging market here in Kenya.
When we dropped the prices from 12 shillings to 6 shillings in November 2009, okay, we sustained very well. When the entire industry made the prices from 12 shillings to 3 shillings in the month of August, for the last 6 months, industry has been sustaining very well. So if somebody is offering some better value to the customer, that should not always be looked at from the point of suspicion and judge their wisdom about making the industry or making the company non-sustainable. This is part of the strategy, must be accepted. Competitor may choose to react or choose to ignore it.
Safaricom has held sway so far with more than 75% of the market. Price cuts by newcomers like Airtel and You pose a threat to that dominant market position.
We will continue to look at those non-voice areas for growth. M-Pesa continues to grow, data continues to grow. We have the only 3G market around, but we're also containing our costs. So we're tightening our belt for the remainder of this financial year. And as I'm going through the budgeting process now, we're going to have a much leaner organization as we go forward.
The leadership standoff in Cote d'Ivoire could lead the country into economic ruin. Simnigiwe Mzegandaba found this report.
No one is really sure who is holding Cote d'Ivoire's purse strings. The country has missed its December 31st deadline on payment of a Eurobond. It's got until the end of January to meet the coupon before it's in default. If anyone, Gbagbo is expected to pay. But his government might find it a little difficult. That's because the European Union has frozen the assets of Cote d'Ivoire's ports, its state oil firm and 3 banks. This is all part of the pressure from the international community to force Gbagbo to quit. Even though arrivals at the country's ports are running more than 2.4% ahead of levels seen a year ago, in the market, dealers note uncertainty about the impact of the EU's sanctions.
As you know, Côte d'Ivoire is a leading cocoa producer in the world with close to 30 or 40% of world supply. So in the cocoa sector, anything happening in Côte d'Ivoire is a matter of concern for us. So clearly the political stalemate that is taking place in the country at the moment is one that is worrying us.
Côte d'Ivoire stands in a very precarious position. The World Bank says the difficult political turmoil is clearly bad for growth. The lender has projected growth at 4.1% this year and 4.3% next year from 3% in 2010. But the EU and the World Bank say it's still too early to ascertain the true impact of the political stalemate. In the meantime, the effects are all too evident on the streets of Abidjan, the country's commercial capital. Local business is pretty much at a standstill. Business owners like Abin Vanga, who manages a small internet company, are feeling the pinch.
Our activities have slowed down at this moment in time. Since we started our business, we have never been through such a bad period before or such a bad economic situation. That's due to the socio-political situation at the moment.
Abin's company, like others, has had to let go of staff to make ends meet.
Before, we worked 24 hours a day. Today, we don't even do 8 hours. The employees are there at most 4 hours a day. They come in only to turn on the machine. These machines have been turned off for a while now.
Côte d'Ivoire is a country divided in its support for two leaders who have both declared themselves president. The question is, how long can the stalemate last? And to what cost for a country whose economy has just recovered from a devastating civil war?